Hey everybody, how you doing? This is Bruce here with Stock Markets with Bruce. Welcome to my channel. Thank you for following me. We're going to talk today about 10 different public companies where insiders, either senior executives, board of directors, chairmen, are selling stock in these corporations, and they have to file insider reports. Thank you, by the way, for subscribing. Give my videos thumbs up. There's nothing wrong with insiders selling stock. By the way, they have to buy them, too, to get them. In some cases, they pay cash to get the shares. In other cases, they're given shares as a form of a bonus. Or in lieu of full salary, they might, maybe they're worth $20,000 a month, but they're only given $5,000 in cash and $15,000 in stock, and there are restrictions as to how you can sell them, when you can sell them. But the time comes, sometimes the time comes where it's advantageous to sell some shares and put some cash in your pocket. Nothing wrong with an investor and an insider selling some shares. For some companies, it's actually a good thing that insiders sell stock, because what's happening is that they're selling paper into the open market, and they're turning around and taking a portion of that cash and buying more stock in the company through stock options they've been granted, and that puts cash into the bank account of the corporation. It's kind of like a way to raise cash from the open market without having to do a separate filing. Now, the first stock I'm going to talk about is Moderna. We've all heard about Moderna and the COVID-19 virus. These guys have come up with a vaccine. They're getting ready for worldwide distribution. We're all crossing our fingers that all the vaccines out there are going to be successful. But look at this stock over the last year. All the charts you're going to see are one-year charts. The stock's been as low as $17.68 from a year ago. It hit a high of $178.50. And is it any wonder why directors and insiders are selling stock? They've been selling now since it reached 40, 50, 60 bucks a share in the summertime. And then look at the shot it had when they announced the success of the vaccine, all the way up to almost 180 bucks. It is no wonder why insiders are selling Moderna stock. It's okay. They have millions and millions of shares. Many of them are still tied up. They can't sell. But this is allowing some of these insiders to finally liquidate some of their holdings and maybe put an addition on their house or afford to put their kids through college or whatever. Carnival Corporation, the chairman of Carnival, Mr. Arison, he sold 5 million shares of the company, around $20.50 a share. He raised $100 million by selling a wad of stock. He still has 80 million shares left. He has only sold a sliver of what he's got. It's not uncommon, though. He might turn around and buy back stock at lower prices if he has stock options. You never know, but I know he has not been given a salary now since the beginning of this year. He certainly hasn't been getting any cash bonuses because, of course, the company is waiting out the virus to try to go sailing again with its guests. Hopefully, they'll be sailing real soon. Now, there's nothing wrong, like I said before, for insiders selling stock. A lot of people think that when insiders sell, there's something wrong with the company. Far from it. Usually management sells when times are good. And here's a company doing really well. Walmart, the world's largest retailer, America's largest employer. Walmart is on a tear as well. They're building up their online division aggressively, creating an online division to take on Amazon, and they've got the money to do it. In the meantime, one of the big insiders of this company sold a bunch of stock. Mr. Robson Walton, one of the children of the founders of the company, sold 1.1 million of his own shares at an average of $152 a share to bring in $167 million. The all-time high, or this year's high, 153.66, low of 102. So he almost hit the high trade of the year by issuing or just selling off 1.1 million of his shares. He's got millions and millions of shares more. Not to worry about his wealth. That 167 million is a drop on top of the billions he's already raised. Another company where insiders are selling, in particular the founder of the company, is this company right here. You recognize this logo, the thumbs up logo? That is Facebook's logo. And Facebook's own Mark Zuckerberg has been selling stock this month in this company. He has sold off about 310,000 shares, around $275 a pop, and he's brought in $86 million. This high of the year, 304, the low, 137.10. and Mr. Zuckerberg is building cash. Now, there's nothing wrong with this because he's worth tens of billions of dollars, but only in paper. If he wants to really have wealth, he's got to diversify his holdings, and with the shares doing so well, he is slowly but surely dribbling stock out from time to time, raising cash and diversifying his portfolio so that he, his wife, his children will be well off for a long time. And he's earned it. He's got a company making a lot of money. Let's talk about another stock that is really on a tear, Nvidia. Wall Street loves this company. They love the shares of Nvidia. They are trading at 88 times earnings, and the high trade this year already is $500 and what is it? $89 a share. Low of $180. It's been on a real tear. Even with a little pullback in March and April, it has roared to all-time highs. The insiders of this company have sold upwards of $80+ million of stock. They have brought in a bunch of money. Again, why not? These folks, have been in here for years, and Wall Street and the markets want to buy in. These guys are happy to, give up some of their shares and exercise options that they have that they've been issued years ago. Another company on a roll, trading at a high earnings multiple, although the earnings are growing dramatically and quickly. So, one will have to watch and see how the stock does long term. Here you go. Here's a company with some products that you and I know. We probably have some of these products in our houses. The Clorox company. They're not just into bleach. They produce a lot more than that, even Kingsford charcoal. Clorox has had a good run this year. The stock is trading now at $199.98. Let's call it $200 a share. As high as $239, as low as $148. Insiders, directors, CEOs, others are selling stock and reporting to the SEC that they're selling off paper because why not? At all-time or near all-time highs, this is what happens. They sell off their shares and earn their reward by being loyal employees. Some of these people have to hold the shares for a year, 2 or 3 before they can even think of selling the stock. They have to report at least 30 days in advance before they can sell. Different rules for different companies, and there are internal rules as well. So the SEC is on top of this, and these companies use the corporate lawyers for advice as to when they're allowed to sell and how many and so on. Here's a company that I don't know much about because I'm not in the need of this company's services, but these guys, Workday, are really on a roll. Workday is a company that produces software that allows management to really grow the company. They've been as high as $248 a share. They've been as low as $107 a share. Workday's market cap is quite high, and they have yet to earn a profit, but they've got a market cap of $53 billion. So the senior management of this company are doing very well, and they are cashing in probably as much as $60-odd million of stock has been sold just early in this month alone into the market. This is an opportunity to take advantage of a real run on your stock. Workday. We're going to hear a lot more about these guys going forward. Here's a company that is not unfamiliar to really any of us. Proctor Gamble. I mean, they've been around forever. The company produces all of these products. Look at them all up there. We have this stuff in our homes. A lot of us have this stuff. Proctor & Gamble, 26 times earnings, trading now at $137 a share. They've been as high as this year as $146.92. And low as 94, and so with a price right around these levels, insiders are selling stock in Procter & Gamble. So there's more selling than buying. No one is really buying stock in the company. They're all dumping. They're cashing out probably over years and years of holding the paper. And again, you can't fault them for it. I know that even 2 years ago, the shares were lower than this. Even 3 years ago, they were down in the 60s and 70s a share. They've come quite a way. All right, the next one here is Cisco, a company called Cisco. The company Cisco is a food distribution company, and they're worth $40 billion at market cap, trading at $78 a share. And their insiders are also taking advantage of an opportunity to sell stock. This company was in the 20s not too long ago, a few years ago. Now as high as almost $86 a share. You got management in there who've really done well. In the last year, they've been as low as 26. So they've come a long way. They have a massive warehouse and distribution system to deliver food to most major grocery retailers. And they have a seriously good-looking company here, but yet, at the moment, not earning any profit. It's been interesting to watch how the stock is running up as high as it is and not yet turning a profit, but they are market capped at $40 billion. So there's a lot of loyalty behind this stock from Wall Street people and analysts. BioLife Plasma Services. Here's a company that is... they're in many companies, in many people's minds, lifesavers. This stock is really on a roll. The company has grown dramatically. The stock has been as low as $7.37, now $39.41 for the high, trading at $38.89. The company trades at 329 times earnings. It is really growing, but the street is ahead of the earnings by a long shot. But that's what happens from time to time. Stocks outrun the performance of the company, and so insiders are dumping stock right now because they're allowed to. It wouldn't surprise me that they've sold $40 to $50 million worth of paper this month already, and they're cashing out. So in some cases, they're cashing out because the stock is really too high for its britches. In other cases, the stock is slightly too high, yet the company makes a lot of money, like Proctor Gamble. Walmart, big money maker, but the stock has done really well. Nvidia, they are making money, but at 80 plus times earnings, they're trading at a very high price. But again, there's a million reasons why people sell stock. Don't forget, when insiders sell stock, it's because they probably purchased stock from the Treasury, and in effect, they're selling stock to buy more, and they're putting money into the Treasury of the company from the markets. It's part of the markets. It's necessary. And it's exciting if you're you're in one of these companies where your stock's on a roll. Your entire retirement is developing in front of your eyes, sometimes in a matter of months, and you've got to decide what to do. Thanks for joining me today. Thank you for your support, and we'll keep you updated on these developments. Take care, everybody.